I'm Laura Diorio, head of NYSE social media, and you're watching Taking Stock.
Seventh consecutive day, it doesn't feel like that. Peter Tuchman, the Einstein of Wall Street.
It's amazing.
What do you make of this market right now?
You know what, look, I think that people have a little PTSD from last year, right? And I think what they want to do is they don't want to spend the rest of the year playing catch up, which happened last time. If you'll remember, after the massive sell-off we had, when the president turned it on a dime, there's no time to even get in the market. I think people have already had that at the back of their head, and they want to get ahead of the curve. Right? Eventually, obviously, this will be over. It may linger for a while, but once the momentum happens, you don't want to sit around and wait to try and catch a falling knife.
Right.
But once the momentum starts, people want to be in. So they don't want to play catch up. They're already getting involved. And I think, people they've had enough pain. They want to get some gain, and they're participating in a short-term rally, which is nice. Is it stay? I'm not clear. We're still going to have a little bit of a roller coaster, but it feels good. A couple of days of green, and it's sort of like it's happening without our permission, just the way the downside happened.
Yeah, exactly.
So you'd rather be on this side of the roller coaster than the other one.
Yeah, and it is in fact a roller coaster. And I'm grateful for you being here to help me kick off the broadcast. The team from Mountain is set to do the closing bell. Eric Criscolo's on deck. Much more Taking Stock right after this.
Boom! Plenty of green on the trade.
You got to hit the gavel with some authority, especially when the markets are in positive territory. Now that my microphone is working, your final tail of the tape on this Thursday, April 9th, the S&P 500 up for a 7th consecutive day, though it doesn't really feel that way. The S&P will finish up 0.6, the Dow up about 0.5%, the New York Stock Exchange Composite Index holding on to positive gains by about 0.1%. With the small caps, the best of the bunch, up 0.6. The market started the day in negative territory, flipped into positive territory around the 11 a.m. hour. They have not turned back. Amazon, Caterpillar, Amgen, your strongest Dow 30 components, your Dow laggards at this hour. Salesforce, IBM, and Chevron. Software stocks, however, getting absolutely throttled. So let's bring in Eric Criscolo. He is a market strategist here at the New York Stock Exchange, one of my favorite personal guests to kick off the broadcast with. Tuchman and I were just, of course, but I mean it. Tuchman and I I was stunned. I had to come check with you to confirm my numbers were correct. It doesn't feel as if this is the 7th day of gains for the NASDAQ and for the S&P 500. The sentiment feels much more sour than that. What are you seeing as you look up at yet another day of green?
Yeah, no, you're absolutely right. When you brought it up as well, I was like, no, it can't be right, but yes, it is.
Yeah.
I think that just the geopolitical headlines are just so negative, and just war and casualties and that's just, it's never anything good to read. So you just always feel that things are worse than they are probably. But yeah, you kind of saw things kind of shift last week, and maybe that hopefully there was a relief rally. There was some thoughts that we're going to get closer to a ceasefire versus an increase in the hostilities, or at least the market was hoping that that was how it was going to turn out as we approached Trump's deadline. We got the turnaround before, over the weekend, or before the deadline on Tuesday. That's what the markets really wanted. That's why we had that big pop yesterday. And so it just followed the price action, right? The markets have been telling you they want peace, or they want an end to hostilities, and they want the straight open. And so that's exactly the price action we're seeing.
Yeah, we don't have a ton of earnings going on right now. We're in that kind of weird
Not
soft
yet.
spot between, I know, and remarkably, we're right around the corner from another big earnings season. That puts the emphasis on economic data. We did get a bit of an old, dated PCE print tomorrow, but today rather. But tomorrow we get a big one for CPI, really our first gauge on pricing pressure since the conflict in Iran first broke out at the end of February. What are you going to be looking for, and your sense on what investors will be looking for as we get that print tomorrow morning?
Yeah, so I think that CPI definitely the more up-to-date data tomorrow. PCE was from February. But PCE showed that we were still getting inflationary pressures coming into this probably inflationary pulse from the Iran war and oil prices. So, how the March data lines up, with the February data is going to be interesting. Goods inflation is still very high from the PCE print, right? So the tariff pull through, that's still occurring. So we're going to have to see, does that change in the CPI data with tomorrow with the March in there, with the March data in there? Does housing still come down? The housing pricing that has been ticking down, does that continue to come down? Because that's been a disinflationary effect on inflation. So just how these headwinds or how these crosswinds are kind of interacting with each other. Are we getting any closer to the Fed's 2% inflation target? Because we haven't come close to it yet.
Yeah, of course. We'll hear what Jerome Powell has to say for what's expected to be his final press conference at the end of April. While I have you, less than a minute left, look at these software names. Yeah. Snowflake down 11% on the day. These names have gotten throttled. Cloudflare down another 9%. Further AI disruption? Yeah, it's the return of SaaSpocalypse. We had a lot of updates from some of the big AI vendors, the big model vendors, Anthropic especially. We also had just Amazon come in with their own solid, very, very rosy takeaways on their shareholder letter, their annual shareholder letter. So the AI trade is happening still. Semis ripped today, trounced software, as we said, and so with maybe the geopolitical tensions kind of somewhat moving into the background, maybe sort of, that kind of trade, that long hardware, short semis, that kind of trade is kind of popping up again, and so it's going to be tough to swim against that narrative. Maybe earnings could turn the tide for the software names. We're going to have to see. Yeah, we'll get a couple weeks out before we get those names. Eric Criscola, thanks for joining us and kicking off the broadcast. Nice to have you here as always. Always a pleasure, man. Skylo, grab your mic. Jeff, you and I will head this way. Hey, what's going on?
Hey, how are you?
Good, thanks. More than $96 million in total trade volume up on Polymarket as participants are trying to weigh in about who will win the Masters tournament. It kicks off round one today in Augusta. Scotty Scheffler, 14%. That's actually the odds-on favorite. Patrick Reed, second place at 11%. Tommy Fleetwood at 10%. John Rahm, 9%. Bryson DeChambeau at 6%, and Rory McIlroy at only 6% odds to repeat as Masters champion. The final round of this year's Masters tournament is set to take place this coming Sunday, April 12th. Jeff, we'll take a look at a couple NYSE notables. You got to start with Brown-Forman. What a day, because for the booze, beer, and beverage stocks that have gotten throttled over the last 52 weeks to 5 years, this is really encouraging to see if you're a shareholder of Brown-Forman. This is the owner of Jack Daniels, popping after the Wall Street Journal reported the company was approached by Sazerac about a potential deal, up almost 12% on the day, up 12% on the year, but still down about 3% over the last 52 weeks. And Jeff, let's take a look here at Caterpillar. This is just an incredible story. It's really remarkable. It's up 2% on the day, reaching a fresh all-time high. Continues to be the strongest name in the Dow. I don't know how many people had that on their bingo cards. Up 37% on the year, up 192%, not a typo, in the last 52 weeks. And we'll continue to track what Caterpillar does from here. Earlier today was the debut, the first ever episode of the J.D. Durkin Show, the only independent live show right here from the trading floor of the New York Stock Exchange. Check out my one-on-one interview with the great Doug Bonaparte, the president of Bonafide Wealth. I truly struck gold with our first guest, the president of Bonafide Wealth, the co-author of the book Money Together, the one and only Doug Bonaparte joins the broadcast. My man, it is awesome to have you here. Really grateful for your time to kick off the J.D. Durkin Show, Doug. Nice to see you, man.
Oh, congratulations, JD. This is fantastic. And yeah, hit him with the disclosures. Hit him with the disclaimers up front. That applies here, too. How you doing?
I'm doing great, man. So I don't want to say, too, I think you've been traveling quite a bit. I feel like you're easy to say, one of the busiest people in the game. Hope your travels are well. Hope you and Heather, the family, are well, most importantly.
Yeah, everyone's good. Got a little sun in during the spring break time. The kids had more fun than we did, but we had fun too.
That's awesome. All right, so Doug, talk to me first and foremost, really big picture stuff. How are you thinking about these markets? Obviously, you and I are having this conversation the day after this incredible snapback, 2.5% relief rally for the S&P, oil decreasing yesterday. How are you thinking about it, and how are your clients positioned?
Yeah, so listen, we're pretty much long-term focused almost across the board. I'm dealing mostly with younger investors, folks our age. So we got time on our side, but obviously it could be a different case for those with shorter time frames. we're in a very volatile situation here. We're on a headline-driven market. We're ping-ponging back and forth between risk on and risk off. You had quite the rally yesterday, thinking a ceasefire deal was struck within hours. It's like, hey, that's not holding here. So we don't even know what the truth is anymore. We just know that the market's going to react to whatever is being said from almost any, power that be right now. And when stuff like this happens, you can see, especially with war, you know, people in general get very nervous, more so than a year ago when we were tariffing everything under the sun. You had a 20% drawdown in the S&P 500. People were freaking out less over that move than they are right now. We're like, what? 3-4% off all-time highs. So like, what's going on here? It makes perfect sense. Like, this is human psychology, investor psychology playing out exactly how I would think it would. So what do we tell clients to do? It's not lip service to stay the course, right? That adage is extremely important right now. There were discounts and are discounts and could be further discounts to purchase along the way, and you want to keep your eyes peeled for that. But if you're reacting to headlines and trading this, good luck to you. If you're someone who says it's easy, you're a liar.
What are some of the biggest questions your clients are asking you? And I'd imagine there's no shortage of interest in the shiny things, right? The things that are going parabolic. The Western Digitals, the Lam Researches, the SanDisks, no disrespect to those stocks, or silver a few months ago. Do you have a lot of people come to your doorstep and say, Doug, what's this new thing? I see all the headlines. I saw this. I want to invest. What do those conversations look like?
Yeah, absolutely. So particularly with the precious metals trade that we saw just absolutely pop off and then almost dissolve just as quick as it went up. There were some calls, to say, hey, should we be getting in on this? Literally the shiny object here. And it's just very difficult to catch these parabolic moves that, show up out of nowhere and then almost vanish as quickly as they came. Commodities is an interesting play because why do you want that in the portfolio? Are you going for the inflation hedge? Are you doing the bunker in your backyard with, a stack of Neosporin because you think it's end of times? Is it like, it's like the perennial boomer move. There aren't a lot of young clients saying, hey, I need that precious metals in the portfolio here. They much rather be risk on with equities. So when you look at those discounts and software stocks and the AI plays and the things you want to hold on to for the long term, that I think is where the opportunities are. You're looking at stuff that's 30, 40, 50% on drawdown. That's not going anywhere anytime soon. That folds into the tech AI growth story. Yeah, that's attractive to me. So if you're being very disciplined with your core portfolio, if you will, the vast majority of the money that you're investing for the long term, you got that opportunity portfolio, 5-10% of your net worth that you're wanting to scoop up individual stocks with. This is all very disciplined, very long-term focused financial planning type behavior. Go do that. That sounds great. But if you're, putting 40-50% size trades, into SanDisk because you're buying that dip, buyer beware.
Welcome back to the show. Tony Edward joins us now. He is an author and host of the Thinking Crypto podcast, longtime friend of ours down here in the NYSE community, but making, if I'm not mistaken, his Taking Stock debut. My man, nice to have you here.
Good to see you, JD.
Thank you for taking the time. Let me get your take. First and foremost, this Morgan Stanley Bitcoin ETF launch, a big item of note yesterday. What should we know?
Yeah, this is significant. Morgan Stanley a bit late to the game, but they have a huge network of advisors and the ability to bring in a lot of capital into that ETF. So yesterday they launched and it had about $34 million in trading volume. So pretty significant for a first day launch. But this is the story that we're seeing all of Wall Street launching crypto ETFs, tokenizing, and much more.
I want to get your take. The White House economist saying stablecoin rewards are not a risk to banks. Talk to me about what the White House is positioning. Does this have to do with ongoing negotiations surrounding the Clarity Act? They're still trying to get this thing done.
Yeah, the banks are blocking the Clarity Act because they believe stablecoin yield on platforms like Coinbase and Kraken are a threat to them. Consumers can go earn a higher yield, and banks are afraid of that. I think the banks need to compete, but they're going to have to find a compromise with the crypto industry because they're lobbying very hard. They're lobbying members of the Senate, and we need to get the Clarity Act through because that is significant for the crypto market. So I think a compromise is on the table, and we're going to get the details soon.
Tony, there is no shortage of geopolitical tensions at home and abroad right now. We're watching investors in real time across the major market indexes. They're trying to play that geopolitical uncertainty, looking for hedges. Are they gravitating towards crypto? What are you seeing in terms of interest there?
Yeah, we are seeing a relief rally for Bitcoin. It shot up after the ceasefire agreement was put out, along with the S&P 500 and NASDAQ and so forth. So I think Bitcoin may possibly get to about 80K, then roll over along with the stock market. So I would recommend folks be cautious. I don't think this situation is done. There's a lot of uncertainty, and we could see further downside after relief.
So I don't know if you would consider that a price target, but talk to me more about your expectations for Bitcoin. I'm trying to pull it up here. As we speak, Bitcoin holding on to 72. This thing's been really range bound. Obviously, we're now several months removed from that now pretty infamous liquidation event around October 10th. Your expectations for what some Bitcoin-related catalysts could be, even in the weeks ahead?
Sure. So I believe the Clarity Act getting passed, if a solution, a compromise is met between the banking industry as well as crypto, that could send crypto ripping because it will be a huge buy the news or buy the rumor, sell the news event. And not to mention, if there's further ceasefire or calming down of the Iran war situation, that will bode well for all markets.
Yeah, here's a look at Bitcoin's chart. I'm doing my own charts live right off my iPad right now, but obviously we get the big pullback and then pretty range-bound activity since then.
Yeah.
Where can people go if they want to find more of your work or everything you're doing over at Thinking Crypto?
So you can find the Thinking Crypto podcast on YouTube, Spotify, Apple, or wherever you get your podcasts.
The great Tony Edward, good friend of ours here, author and host of the Thinking Crypto podcast. My man crushed it. Please come back and see us anytime.
Absolutely. Thank you for having me.
It's nice to see you again, my friend. Don't go anywhere. A whole lot more Taking Stock coming up live from the big board right after this.
Woo, yeah. There it is.
Welcome back to Taking Stock. Money 2020's very own Scarlett Sieber recently sat down with Shruti Patel of U.S. Bank. They discussed their partnership with Greenlight, the Money Awards, and much more. Take a look.
Hello, I'm Scarlett Sieber with Money 2020, and I have a great guest today. We have Shruti Patel, who is Executive Vice President, Chief Product Officer at U.S. Bank. So one of the things that makes us so great, Shruti, is that actually U.S. Bank won the Grand Prix last year, not in the banking category in this case, but in the partnerships category with the partnership with Greenlight, which is so exciting. But can you tell us a little bit more about why U.S. Bank chose to partner with Greenlight and tell me a bit more about the partnership?
Well, first of all, thank you for recognizing us for the Grand Prix Award for Partnerships. Our teams were thrilled. Partnership has been a huge element of how we bring products faster to market. And we, over the years, have been partnering with very innovative fintechs in this space. Greenlight was one such partner. They were solving a very important problem for our consumer bank customers, which is how do we help our consumer bank parents' population raise socially responsible children by helping them manage their spend and budgeting needs effectively. Greenlight was able to get that much faster to market, and we could deploy it at scale to a large, broad audience within our consumer bank. And so we were delighted to partner with them. We're seeing really good momentum coming out of that partnership. A lot of parents and children are already engaging and monitoring their spend very effectively.
That's amazing. And as a mother of a 2- and 5-year-old boy, early days, but you can already start to understand the importance of financial literacy and education and kind of building the next generation of people here when it comes to that financial literacy. So let's talk about the banking category in specific. You get to see a lot that's going on. Money 2020 has always kind of sat at the hearts of payments and banking. From your perspective, Shruti, where are you seeing the biggest trends as it relates to banking in particular?
So many. It would be amiss if I didn't mention AI. I think we are, noticing that AI is no longer an emerging trend. It's a fully established trend. We are beginning to see a lot of AI use cases. Specifically in banking, it's helping us deploy at scale, solving some of our underwriting or fraud detection capabilities. How do we get access to capital in a very frictionless, but in a very accelerated manner to some of the small businesses as well as consumers who bank with us? Another one is customer operations, 24-hour banking, helping our customer support transcription, with synthesis of the customer relationship data. So when a customer calls into our operations, we are able to help them in a much faster and efficient manner. The second one I would say is stablecoins and tokenized deposits. We are really looking forward to seeing some great innovation coming out of the fintechs and the tech companies right now. How can we realistically deploy some of this at scale and solve true customer needs?
I love that. So many great things there. The fraud piece that you talked about, we've certainly seen a lot from our side looking at this globally. People are thinking about how to utilize AI specifically to solve some things for fraud. And then there's companies who are coming to solve because the new advancements with AI and the problems with fraud with that. So great examples there. So let's talk about maybe, a little bit of advice for those who are going to be applying and submitting for the banking category. When you're thinking as the president, what type of entries are you looking for? Like, what are you going to get excited about?
I think the jury and I will be looking for a lot of companies which are solving true customer needs, but are able to deploy the technology at scale. A lot of the companies are able to come up with very differentiated and innovative use cases, but deploying it at scale or meeting true customer needs sometimes is a challenge. And so everybody in the fintech, banking, issuer, or network industry, if you have a great idea, a great innovation, which is solving a true customer needs and can be easily deployed, please submit for the awards because we're waiting for it.
So let's talk about customers' needs for a second. We had your lovely CEO, Gunjan Kedia, who keynoted at Money 2020 Vegas back in October. And she was really talking about the transformative work that U.S. Bank has done. And in your lens and your view, when you think about the business banking in particular, what problems, what customer needs are you really focusing on to help the business banking world especially solve?
So that's a great question. I think we're solving for a lot of bundling needs. And what I mean by that is we are finding a lot of our small businesses are really beginning to rely on their banks for a one-stop shop across banking, their payment solutions, and software. We partnered with a lot of really good fintechs over the last couple of years. We launched with Melio, we launched with Gusto, embedded bill pay, embedded payroll capabilities. And this is really because our customers are not only looking to bank with us on simple operating accounts or saving accounts, but they're looking for money movement capabilities. They're looking for real-time transfers. But in addition, they want to be using some of the sophisticated account payables, account receivables, or payroll capabilities all free within our online banking. Our small businesses constantly complain about the cost they are incurring on standalone software. And so we're trying to bundle a lot of our offerings within the banking framework. The second one, I would say, our small businesses need access to capital. And so anything and everything we can do in terms of fraud detection, in terms of lending faster to our small businesses as they're setting up their businesses or growing their established practices, we want to make sure that access to capital is really easy for them. And so super focused on bundling, whether that's through banking and payments or also software applications as well as access to capital.
It's so interesting the concept of bundling back because when you think about the first wave of fintech, it was all about unbundling the bank. And now, actually, especially for your small business customers, it's about making it easier and accessible in one place, um, which is really interesting. So, Mary Ellen Iskandarian, who's the CEO of Women's World Bank, Banking, is one of the presidents as well. So, we were talking a lot about inclusion and financial inclusion. I'm curious from your lens, Shruti, when you're thinking about this from a business owner's perspective in business banking, where do you see opportunities as it relates to financial empowerment and financial access?
Again, a great question. When we do product development at US Bank, inclusivity is one of the top anchors we go after. So we want our products to be inclusive. We want our processes to be inclusive. And then we follow a very digital plus human centric approach. And what I mean by that is we have a huge team of business access advisors who work in our footprint markets. They work directly with businesses on financial literacy, business literacy, essentially educating them on tools and services. It's all free, and it's not only for our small business customers, it's for any small business who needs our help. We also recently partnered with Next Street and we launched a Business Resource Central Hub. It's a free online portal which small businesses can access. And we have multiple courses, part of the curriculum, which small businesses can essentially think about how to manage their books. How do they think about ledger? How do they think about access to capital or setting up an online website? And so that portal, or rather the Business Resource Hub, has been a great success story. We see a lot of businesses engaging with the hub. And again, it's not just for US Bank customers, it's for everyone. And so the idea is, along with our human-centric approach of business access advisors who can help all of these businesses in the market, we also have access to online capabilities which they can as well use for their businesses.
One of the things that's most resonated just listening to your feedback on these questions is how proactive US Bank has been on partnerships and leveraging, best in class capabilities across the board. Well, with that, that is all, Shruti. Thank you so much. Again, we have Shruti Patel, who is the EVP and CPO of US Bank. And you can make Shruti, the rest of the team, go ahead and submit those entries for the banking category. We'll see what happens. In the meantime, back over to you.
Hello and goodbye. Thanks for watching Taking Stock. We'll see you again tomorrow.